Hi guys. Right. So we're busy with technical analysis, support and resistance lines. We've gone through the multiple time levels, how we get as strong as and the higher time frames, how those support lines have got more authority than your lower time frames. We saw that if we go down into our lower time frames, like 1 hour and 30 minutes, it gets ridiculous with the amount of support lines we see there, support and resistance lines. And we talked a little bit about the psychology behind the support and resistance line, and what happens if the price movement breaks through that support resistance line. It's like a dam's wall that gives in, and water running rushing through. So the next phase is still support and resistance, but in this case, it's going to be in formations. So what is a formation? Formation is exactly what we say. It explains. A formation is a triangle. A formation is a flag. A formation is head and shoulders. So we've got a variety of different kinds of formations. Now the question would be, how does that apply to our charts? Well, we can actually go and draw these formations in these charts. And they've got very, very, very significant relevance to behavior and potential behavior of traders on what's going to happen. What's important about formations also is it's predictive. Um, so you can monitor and track that formation, and with predictive behavior that's going to happen to a very high certainty. Okay, so let's start with the most common one, and it's a triangle. So let's just draw a triangle here. You guys must forgive me. I'm not the world's best artist. Okay, so there's a triangle. So how would that apply in our markets on our charts? Well, let's try and we draw a price movement. So let's say our markets went up, came down, went up, came down, went up, came down, and so the market started moving downwards, downwards, and then it moves up, comes down again, it moves up, down, up, down, up, and then ran. Okay, so this is just a drawing. So this would be our candles going up, candles coming down in the bear trend, and then what we will physically get is we will see a price movement where we can draw a support line on the lower end of the bounces of the swings, those little areas where the price level stopped the price movement from going lower, and we can draw a line on the top end of the price movement where that resistance line stopped it. So price moving up, coming down, nice little swing, and then suddenly it started showing this kind of behavior. Okay, so that's a triangle. Now we get different kinds of triangles. We get a triangle that looks like this. It's known as a flat bottom triangle. Oops, okay, why? Because its bottom is flat. And that's an inverse flat bottom triangle. So that one, the slope is on the top side. This one, the slope is on the bottom side. And then you get a triangle that looks like that. I like to call them conversion funnels. All right. Triangles, when they are spotted in the markets, are generally continuation formations. So formations is an indication of a behavior, and there's going to be a result at the end of that behavior. If we look at this one, so what happened was bears were having a lacquer day, going down, going down. Suddenly at some price level, it bounced back up. They came down again, but the price level held them. But the bulls were also not able to make a new high. Bears won't be able, were holding that, couldn't break through that support level. Bulls couldn't succeed in making a new high. And eventually what happened was it all broke out and the market continued. How did it continue? Because we had a bear trend, and when it broke the formation, the trend that previously persisted now continues. So a continuation of a trend. So we've got um, um, formations that is trend continuation formations, and we've got formations that trend reversal formations. We will still first work with um, trend continuation formations, of which the triangle is our primary one. Okay, so market moved down, it formed a formation, it broke the formation, and it moved down. Now, what was interesting in this, once again, formations are, next to support and resistance lines, the most used technical analysis tool on the planet. Every trader on the planet will be drawing the exact same triangle on the same chart on the same time frame. All right. So you have multiple eyeballs, and it's once again a self-fulfilled prophecy. So every trader will be expecting this formation to break. And if it breaks, what does every trader do? They enter into a position. Why? Because that's the expected behavior, is that the market will continue and therefore they can make money. So flat bottom triangle, continuation of a trend. How you should look at this is typically the behavior that we see in here is like a winding up of pressure. Remember the support and resistance we said was like the dam wall. If it breaks, the water runs out. And this is like the winding up of pressure, winding, 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 winding until it gets just to the point where it cannot resist anymore and it breaks out. Once again, I look at a formation that it has to have at least 3 test points. Anything less than 3 test points, then I don't regard it as a formation or any authoritative formation. So let's recap. We're busy with triangles. Triangle is a continuation pattern. In other words, it's a pattern that will appear in a trend, being bull or bear trend. And the breakout of a triangle, generally speaking, is in the same direction of the trend. Now, you can also get the following. Let's just clean that. Let's redraw a triangle. Let's go draw a trend. So we had that. It's coming down. It's coming down. It's not a very beautiful trend. So our expectation here would be for the trend to continue, right? So for it to continue this way. Well, it's not gospel truth. It's not 100% accuracy. So there are instances where a formation can fail. We call it a failed formation. In other words, the triangle didn't go down this way, but instead it bounced and, oops, let me do that a little bit better. It bounced up and could be a reversal direction. Okay, so it's just something you need to be aware of. It is not gospel truth that it's going to break down. There can be a failed formation where the formation doesn't, it's not a continuation of the preceding trend, but it can reverse the trend and it breaks up in the opposite direction. Something to keep in mind. The triangles, flat bottom triangle, and then we get what I call a conversion funnel, which is also a triangle. The main thing with a conversion funnel triangle is the following, and that is that it is not a continuation or a reversal. So the trend can genuinely go into any direction. So if we have once again had a uptrend that then became a downtrend, it hit that conversion funnel, it can now go either that way or that way. Will it break out? That is gospel truth, but which direction? That remains to be seen. Once again, it's a predictive pattern. In other words, when we see one forming, we know what's going to happen in this area. Once again, I want to see at minimum 3 tests on the opposite side of the break. What does that mean? It means this. So let me just draw it again. I'll draw a flat bottom, and I'll draw a normal conversion funnel, as I call them. So if it comes in, that will be 1, that will be 2, and that will be 3, and that could be, so it needs to test it once, twice, 3 times minimum before I would regard that as a breakout. If it was in the opposite direction, oops, sorry. So this was actually obviously a continuation pattern because it's a flat bottom triangle. So before we can break down to this side, we want it to test it 1, 2, that third test. It will test it. It came in, tested it for the first time. They not there because it first have to go and bounce off. So that will be our first test. Bounce off, that will be our second test. Bounce off, that will be our third test. So you have to have 3 tests for the breakout to be legitimate. Okay? You cannot have 2 tests. So boom, boom, comes down. That's not a breakout in my mind. All right? It's a very weak one. So that was only twice. Okay, so you've got a trend. Trend comes down. It moves, bounces off the support and resistance lines of the formation. The opposite direction is where we start counting our bounces. So it needs to come into the formation, hit the support, bounce off it. So that will be 1, 2, 3, 4. So once again, the more times the formation are tested, the stronger the formation gets, the higher the probability, and also potentially the higher the velocity of the breakout. All right. So let's go and have a look at how triangles can be spotted in our chart. So we will go to our Bitcoin chart, and I'm on the 1 hour, and I've started to draw them. So let's have a look at, just hide this, zoom in a bit so we can see a bit better. So here we see a proceeding downtrend, bounces off that support level, goes up, bounces off the support level again, goes up, bounces off the support level again, true swap in break velocity. Interesting thing about this flat bottom triangle, once again, it was a reversal, so it did not continue. Okay, let's have a look at another one. Here we've got more of a conversion funnel, so it's not flat bottom. But markets came up, bounced off there, and retested it. So it was 1, 2, 3, boom, and there she goes. There might be some that I've missed. Here we go again, continuation comes in, bounced off, and continuation pattern. Here, market goes in, 1, 2. So this is a weak one specifically because we only had a bouncing of the support line twice after it hit that, but continuation of the bull trend went up to there and then retraced. We've got here, this is a conversion funnel, goes up, bounces off, retests that, and there she goes. Here we go again, comes in, bounces off the support level, bounces of the resistance, bounces of the support. It's always made that. I would count that. Came back. I would count that as a little wiggle. Went back up to the resistance line, bounced off it, came down to tried, and broke its back. You see the velocity every time. You've got all these small congestion winding up pressure, and then breaks with velocity. Here we go again. Train comes into the triangle, hits a support level, bounces off to the resistance level, come back to the support level, bounces off to the resistance level, come back to this. So this is a very powerful one because we've got 1, 2, 3, 4. And the fifth time, it hammered through that. Wall broke, water gushing, all winded up, and it broke through that support line. Did it again here, came in, bounce, 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 broke. Yeah, we've got a little bit of a smaller triangle, but triangle nevertheless comes in, goes to support line, goes back to resistance, comes down to support line, goes back to resistance, support, resistance, and breaks with the velocity. So once again, the important thing about formations is that it is a highly used technical tool. Thousands and millions of traders are looking at the same chart, drawing the same lines with the same expectation. So you can see in that there's a lot of behavior that we can, number one, track, and number two, that we can predict. We know that a lot of traders are looking at the same formation. We know that they all expect the same kind of behavior. So that makes sense that in that case, we know that, all right, if I see a formation with so many test points, it will break either up or down. It's just going to be a question of which direction. But that expected behavior, we could already establish in the midsection of this formation, like, all right, we are busy forming a triangle now. I can expect a specific behavior when this formation breaks. And true as Bob, there it happens. And you'll go through this charts and start drawing triangles. The only variable in the triangles is the distance of the break, and we will talk about that in a little while. Here we've got flat bottom again, coming in, bounce, 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 bounce. You see that little tail there, winding up, explode. Bounce, 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 explode. Now, guys, the reason I used Bitcoin was specifically because Bitcoin tends to really work well with formations. You won't see this level of formation forming on all charts. For instance, if you go to the S&P 500, ALSI, or what have you, you do not see these volume of candles forming. So Bitcoin in itself lends it very well to formation trading and potentially building a strategy around formation. But for now, let's use it as for educational purposes and just to see, plot them and see how they work. Let's see, did I draw more? Yep, there we go. Came in, bounced off it, bounced off it, bounced off it. Came with a little red candle. Right at the end, it's getting to being squeezed and explodes right out of it. Same thing happened here. Came down, up, came down, up, came down, up, and explodes. Once again, predictive behavior. Conversion funnel, triangle, we could predict the behavior coming in and coming out of this formation. Once again, the bottom line is called support because why? It holds the formation. The top line is called resistance. Why? Because it holds formation. All right? It keeps the formation intact. For a formation to form, we need a support and we need resistance. All right, guys, play around with the triangle. Draw it around. You can go to your 30 minutes charts. You probably will have a whole lot more triangles to be drawn up in there. Play around with that and see how they play out on the charts.